Recording first. Perfect.
Yeah, so can you kind of repeat what you were saying?
Okay, so we were discussing about the first of all the range. I was confused about the range, and then I was also confused about the internal range liquidity that you marked here.
Yeah. Okay, so this was our current range right here, right? That was the range, and that's in terms of liquidity. What people high anticipating this to get taken out, they come into this PI here, right? So yeah, sure, that's in hindsight, but now let's go to the current time. So this is Asia session, so let's pray this out. See what happens. Let Asia end. Okay, so Asia ended. All right. So yeah, so I mean, this looks quite obvious to me, obviously, like a smart money trap, right? It just looks very obvious. But let's say that you're going to take it short here. So if you plan to get directly, let's say you took it, so that's the Asia high, that's the unmitigated wick, which would be around here. So you take it directly, assuming that you're aware of the higher time frame range. But let's say you take it here. Okay, so you're tagged in. And it looks good so far. Tag you in, you're happy. You think this thing is just gonna tank now. All right. But again, you're still aware of the higher time frame range and the higher time frame narrative. This could get taken out potentially. So look at that drop. All right. Nice little drop, why not? So now price is starting to retrace. And if this price point here fail to take out this low, that's going to become weak. And because we're in the 15-minute time frame, what's the most logical time frame to go down to see the opposite Q form? 5 minute and 1 minute. Okay.
1 minute.
Yeah, the 5 minute, 1 minute, which either you can see better and makes more sense to you, right? So that would be a weak high. Now that turns to liquidity, which just fulfills this overall, just a trend line area that I just kind of created. So let's say you took a loss here. Okay, so we took a loss here. It's fine. Took one out. So now you're aware of the higher time frame range. That's internal liquidity. That's the POD you have marked up. And then you have short here, for example. Let's just say that you took it directly from the higher time frame POI. All right, now you tagged it. Now I think this was news. If this was news, then you probably would have got taken out. But there it is. There's a tag, and then your targets. See that's the tag. You would have this first low for 10R. Either take out full volume or partials, and then eventually your last target would be down here. So you took an L on the first position, and then you took a winner position. Simple as that. You just became pretty much the inducement. You pretty much just sold on the trap. Where a lot of people will see this as the area to take a short. Okay, now you may say, how can you avoid this? How can I not get trapped? There is no answer to that. It's like it doesn't exist. Like I can tell you that, oh yeah, for sure in hindsight, this is trap. But like why don't we admit that we will actually take that trade and take that loss? Like why is it so hard to admit that we'll lose? So yeah, that'll be a trap. And if you took it, it's fine. That's what the management comes in play. Right. So yeah, that's my only explanation to this. I don't have anything else because if you saw this as a POI, then you saw it as a POI. So I'm just gonna give you the advice of if you took this area, then you took that L. Simple as that. But that's the POI where price came into, and this is what would have happened or the aftermath after you got taken out, which also happened on Friday, which was NMP. So I wouldn't have traded this at all. But that's the only explanation that we have. Like there is no way to avoid this if you yourself, I think your name is Ash, right? Yeah, Ash, that you yourself
Yeah.
saw this. If you saw this, bro, then you saw this. You did. Not me, not John, not Alex. You did. And because you saw this, the only thing that I can do and tell you is this is why I came in here, and this is what you could have done if you took it here. In other words, you were just taking a loss, and that just would have been it. Now just take it, embrace it, accept it, move on to the next trade. right? And that's why I say,
Yeah, I can see how you call it a smart money trap, because I can also say that this was a type 1 range. And so the only thing, that that compelled me to take a short from here was this strong high, because we had another strong high within this type 2 type 1 range. So that is where,
yeah, and like, look, he came into that, it gave you the reaction. So
yeah, exactly, exactly.
exactly. So now let's think in the fractional market. If this was a monthly POI, then these candles will be what? Monthly candles, right? So if there was a monthly POI, these would be monthly candles. So these are 1, 2, 3, 4, 5, 6, 7, 8 months worth of data off of this small reaction, right? But because it's the 15-minute, it didn't last that long. So when the market is fractal, that's exactly what I mean is you have to see it in both ways. You have to see the higher time frame like the lower time frame, and see the lower time frame like the higher time frame. Be like, oh yeah, it did react. But if this was the monthly POI, these are actually monthly candles or weekly candles, for example. So this would have been a lot of data. But because it's a 15-minute, it was only short. And then there's the push up, took you out. It was just a trap of price break structure. Yeah, pretty much T1 was formed here, came into here, and then price drop afterwards. So that's why I say 2 trades. Take 2 trades. If you take 2 losses in that day, you're pretty much done.
Yeah, thanks, man. I guess I just need more time and practice and experience in the market. I'll
It,
pick your brain sometime else. Thanks.
yeah. Yeah, like it's not just experience and practice in the market, bro. It's just accepting that you were wrong. That they just accept it. It's like I was wrong. That's it. Like the moment that you accept that you were wrong, everything will make sense to you. Trust me. You just have to accept it. It's just like, oh, I was wrong. Yeah, you were. That's it. Done. And just move on to the next trade. That's it. If you don't accept it and you keep on saying, oh, I need more practice, or oh, I need to do more of this or more journaling, you are just pretty much you're never telling yourself, I was wrong. I was wrong. I admit it. It's okay. But instead you just keep on telling yourself that you have to be better and perfect and perfect and perfect. And eventually you will never get to that point because you cannot be perfect. So be like, oh, it was wrong. But this is where it came into. Okay, nice. Now move on to the next trade, right? And for those that would ask me, then how would you caught this low right here? I have no idea. That was NFP. I don't trade. So yeah, I wouldn't have caught that. But yeah, so I hope that makes sense on what I just said. Yeah, let me go back to the questions.
Yeah, thanks for your time.
Brian, is it okay to ask a question? No.
Yeah, go ahead.
Okay. My question is this, right? Let's say you're reacting off a daily POI. Where do you wait for your breakout structure, or you're reacting off of 4 hours, or you're reacting off of a 1 hour or 15 minutes, right? Because I remember the last Zoom you did, you didn't see something clear on the daily, you went straight to the 15 minutes.
Yeah.
So I'm just trying to wrap my brain around that to see how your thought process is from the higher time frame, systematically, and how you get into the lower time frame before execution using the type 1 or type 2. Thank you.
Yeah. All right. So let's get into I just call it into some logic thing here. All right. So here in the daily time frame, if I ask you, what do you see here on the daily time frame in this blue box? Is there enough data for you to make a decision? Is there enough data for you to decide, all right, I'm gonna take a long or a short? So that's the question. If there's not enough data, then drop down. You have to see your range. Where are you in the market? Now you're in a 4-hour time frame. That gray box, or blue box actually, look like this with nothing but just candles. On the 4-hour, now we see some type of form. There's some structure going on. Now I can start to pretty much see, all right, what can I anticipate next? Now remember, if the market is fractal, which it is a higher time frame than on the 4-hour. But let's say this was the 1-minute time frame, and our overall target was, let's say, right here. Then all we're gonna do is just stack, just short, 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 short until we fulfill the overall target, right? And I feel like that's where people don't have the confidence to do. So, for example, if we were to take out this internal liquidity, and if we had the confidence to just stack trades until the internal range liquidity, we have multiple opportunities. We had it here, 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 and here, for example. But the question is, do you have the confidence to even do that? Do you trust yourself? Do you trust your analysis to long all the way until the internal liquidity is taken? But also, are you also aware that if it doesn't reach internal liquidity, let's say it doesn't reach this area here, and it reacts off of, I don't know, let's say just if, for example, it reacts off of this, are you also aware of that? Are you prepared to pretty much, let's say, quote unquote, change bias, right? So on the daily time frame, there was nothing at all for us to see whatsoever. So drop down to the 4. Now we're starting to see some structure. Maybe it's not enough for you, right? But once you're down to 4, drop down to the 1, to the 15, and start to build up your entire overall narrative. Okay, what's going on here? Where's my high? Where's my low? What's my current range? What's my external range? What's my internal range? Right? Where's the liquidity? Where's my extra session ending at? So, for example, like some people took it here. That there's nothing wrong with that. You just price came here. It gave that reaction, small reaction here, with a small little POI that we just have marked up. But again, right, where's the strong high at? This is the entire high where it started. This is the entire low right here. That's where the move initiated. That's where the move ended. So the question is, did the price take out the high, or did it just take out this POI that you thought it was going to hold? And that kind of just goes back to the question that I got answered. It never took out the strong high. So it never took out the strong high, which all of this is untouched. There's a reaction. You would actually make some money off of this, right? But
Okay, so I have a question on
Yeah.
what you just said now. Okay, like from your course, what you said, you need to see price take out a strong high, okay, fractal high, and break a fractal low somewhere, right? To validate it, we have our A here. So it's to establish B, we need price to take out another fractal high. In this case, this is the last fractal that caused this low, correct? So this becomes an internal range liquidity, right? So this becomes the A and B. So whatever trade I'm be taking should be above this level. But from what you explained now, you're taking here as a high, and expecting to take a trade setup from here. So the thing is, should I always wait for this obvious fractal high that took out liquidity, broke a fractal low, and look for the internal range liquidity and wait for price coming to the premium? Okay, before I look my trade setup, or because it's continuation, I just follow it till it fails. Can you elaborate on that, please?
Yeah, so after, like I mentioned, after every breaker structure, there's going to be a new range created. So we have a breaker structure here. That's a BOS. A breaker structure. All right, BOS, so a new range is going to be formed after that BOS, right? That's a strong high. So that's where the move started from. So this high is strong, price should hold. All right. And all of this can be the POI because the move started from here. The block started 1, 2 candles. That's the entire order block right there. So that's a strong high, right? And after the break structure, a new range will be made. All right. So that's the break. Price made a push down, made a retracement. You could have shorted here in the lower time frames. Then price break structure again. Now this would be what we call internal range liquidity. We're anticipating this to get taken from the external range. But what's inside of this range? Obviously, price is not just going to do this. Well, not that, but just go straight and drop down. It's going to work its way up there. So inside of this range is going to be a new range, which is the internal range. So now we have this high here sharing a low with the higher time frame range. So now we have this low here and this high here, right? If we're anticipating this high to get taken, then this to us is going to become an obstacle. It's in the way of the overall target. So because it's a untested strong high and it's unmitigated, let's say, price is going to pull back into that and give us some type of reaction, right, before it continues to take out the original target, if that's your target. So because we know that price can give us a reaction from here, we can capitalize from that area. That's the reason why the monthly and the weekly POIs work amazing, because even though it's an obstacle and it's the wrong POI and doesn't hold, that small reaction can be worth days, if not weeks, of data. So you see the reaction that we got. Let's say you took it here on the minute time frame, you would have exited here with a nice 10R. And then once price did that, and then you saw that price failed, that becomes weak. Now that price gave it a reason to go higher into the higher time frame POI, if that makes sense.
Yes, it does so much. Thank you so much. And how do you classify your break of structure? 2 candle pullback, 1 candle pullback, 3 candle. Do you have any prerequisites for that?
Yeah, okay, yeah. So I mean, like, I don't know how you guys learn structure. That I feel like that's everyone's different. But for a break of structure, I want to see at least body close below a structure point low. I'd rather have that. But again, the market's fractal, so there is no right or wrong. But I'd rather have a candle close, something so obvious that you just see it. Oh yeah, I broke structure. So like this right here. So I broke this high. That right there, it looks very obvious. It broke. This looks very obvious. It broke. As of something like this wick, that doesn't look so convincing, does it? That it's supposed to break structure, right? But yet there is times where wick is more than enough to break structure, because a wick is bodies is candles in the low time frame. So I just rather see bodies over wicks.
And that's on both sides of the market, rather as reversal or just continuation.
Yeah, on both sides. Yeah, I mean, like, there shouldn't be no actual difference if it breaks to the upside or the downside. Yeah.
Okay, because I remember you saying that if it's I think 5 minutes, week break is okay. But if it's above 50 minutes, body break. I don't know if I'm wrong.
Yeah, so like on higher time frames, I told you on 15 minute, like where right now, I'd rather have a body. But on like the 1 minute, 5 minutes, seconds, if you wait for that body to break, you will miss a lot of setups, because you're dealing with small time frames. So just take the wick. That's more than enough. But like on the higher time frames, I'd rather have a body. I'm not saying that you should. It's just something that you would rather have. It's like if you back test it enough, you will see that your body just feels, you just feel more confident taking the trade, seeing as a BOS, when there's like obvious candles breaking that structure point, instead of just this little wick right here. Because true or not, you wouldn't feel that confident to say, yeah, that's a BOS. I mean, I wouldn't. Like, yeah. So that's what I was.
Like how many candles pullback do you want to see before a break? I understand sometimes there are some formation of maybe a 1 candle and it's not really clear and it has a body break. Do you have like a rule of 1, 2 candle pullback or 3 candle pullback before it breaks to I'm asking based on your journaling, right? Because I know you've journaled a lot. So what have you seen pullback wise that gives a nice BOS that makes sense, for consistent profitability?
Yeah, well, I mean, I know that a lot of people use that. They use the length of how long the pullback is to determine a structure break. I don't use that. So to be honest, I don't have an answer to that, because I don't really care of how long the pullback is. So like I never use it, but that's something that people use, but I don't use it. So I can't tell you that. Just whenever it breaks, the pullback can be as long as it wants, because like this pullback can be all the way up here, or all the way up here, or all the way right here, right? As long as this strong high is not broken, my bias is still bearish. This is still my POI. Just because I took a short here and I got stopped out, it doesn't mean that this is invalid, right? It's still valid. The POI is still gonna hold because the strong high is still intact. So yeah, I mean, I don't like this pullback can come as long as far as it wants. So I don't have an answer for that, because I don't really care about that.
Okay, thank you. You've answered most of my question. I really appreciate you doing that. There was a time, I think was it the last Zoom, I don't know if I chatted you or something, where assuming this was a pullback and I saw you took a trade setup this way to go up, is it encouraged to focus on probably 15 minutes counter or just literally wait for a pro always, so
Well,
we're not always on the wrong side?
yeah, well, when you're just getting started, and like I told you, you want to practice on getting the right bias first. Once you get the right bias, then you can start to experiment with counter trending. And then that's where you get into the ping pong scenario. That's when you're ready to go long and short and whatnot. But you want to just practice on getting the right bias. If you get the right bias, whether you enter with a 2 pip stop loss or a 50 pip stop loss, right? If you get the right bias and you know how to get the right bias, then you will end in profit at the end of the week and at the end of the month. So once you get the right bias, now it comes down to your entry refinement. So now you figure out how you're going to enter, right? The entries become irrelevant if you have the wrong bias. So practice the bias first, right? Like don't even trade it or take a trade here if you know you don't feel confident. Just watch price. If your bias is correct, that's a win in your book because you had the right bias. You think it's a loss because you had the wrong entry, but the bias was right though. So if you get the right bias, now it's time to work on your entry. How will you entry? How can you quote unquote perfect your entry? You know, even though it won't be perfect, but how can you get that good entry? Okay, because the thing about, you know, SMC liquidity concepts is our focus is such on tight stop losses. But what if you took it like this with a stop loss above that high with a 32 pip stop loss and a TP here with a 1 to 2? That trade was still right, but just because you were so focused on a tight stop loss, you got taken out. So that other individual made money with the same trade you took, but you got stopped out. And then that's where we kind of just blame the market, or we blame the PY, or we blame the strategy and say it doesn't work. Well, the bias was right though. If the bias was right, then you weren't wrong. You just, yeah, I just had a wrong entry. That was it.
One last question so I can get out of your face. I know I've been just talking and talking.
Yeah.
Okay, now I understand you don't just trade. You trade quality setups, okay? How
Mhm.
can you build a community to take the right set, even if it's just a one solid setup that has a higher time frame narrative in a week golden, even if it's once in 2 weeks golden, right? The whole point is for long-term stability, right? What kind of setups do you wait for to take, you know, removing the 15 minutes, let's say 4 hours daily? What is that special setup you usually take every now and then? You know, because I know you take 2 setups, win or lose every week. Can you please just show us here? Thank you.
Yeah. So first, I wait for Asia to finish. So I let Asia finish, right? And I take it off of T1 and T2 off of the intraday time frames, which is like which is the 15-minute, 1 hour, and 5-minute. If I can't see nothing clear in the area. So if I'm gonna take this trade, right, based on my experience, I'll wait for this, okay, to get taken. I'll rather wait for this to get taken and tap into here than to take it here. Okay. But let's say price does not tap this and price just goes here and it drops, then I missed it. And I'm okay with that because I wanted this setup because that's a high probable setup. And I know if it comes here, this makes up for, you know, the whole month pretty much for me, right? So I know that. So I wait. I'm patient. I wait for high quality setups that are textbook and I just wait. So I don't take it here. I rather wait for this. I rather miss the move than to take it in this area here, right? So now look over here. This one got missed. So notice, if this is my range from here to here, and I took this counter trend along right here, and I exited, I think it was right here, remember, right? I would have loved this to get taken. That was my anticipation. That's what I mentioned on the previous call. I want this to get taken and to come into something above. That's what I would expect. But we had it get a strong high, so we can expect a reaction, and eventually this reaction, this obstacle, turned into an entire push down, right? And I mentioned that. I said that that's an obstacle. So you cannot ignore those areas. If you ignore it, then you just pretty much just lying to yourself. So I anticipate this to get taken and price to come into a PY here. I know that if price does this, this will make up again from a whole week, from a whole month. I mean, because that's an insane trade. So that's my high quality setups. So that's how I take them. I'd rather miss a few trades than to take a early entry to say somewhere here, because a high chance that 80% of the time, and not, you know, not every time, but 80% of the time, this right here is the trap. So let me just clear this out for you. this right here is a trap. So 8% of the time, this right here is a trap. And this is based on my back testing. That's a trap. And the other 10% it's not. It would just go from there because of higher time frame and whatnot. But 8% of the time, this would be a trap. And that's why I seen that. So I'd rather just take a higher probable setup. And then that'd be break structure, retrace, break structure once again, that'd be like T1.
So
So
you wait for it to tap into the POI before you wait for the signature entries, or no?
you said what?
Assuming, for instance, right, let's say this is your 50 minutes POI.
Mhm.
Once price taps in here, mitigates it rather, that this is when you wait for if it's gonna be a type 1 or it's gonna be a
Type-
type 2,
Yeah.
correct?
Yeah.
Okay,
Yep.
thank you.
Yep. Yeah. All right. Then time flies fast. Let me get some more questions real
Hey,
quick. Yeah.
I sent my chart in the chat. I got a few questions on my L I took.
What's your name?
LENNOFX.
I got you. Hold on.
Leno FX.
Leno Haney.
Yeah. Yeah. All right. So my problem don't really be direction. So this is EU L I took on this past week. I took a L right here. My the direction really don't be my problem because overall for this week I was trying to get into sales, right?
Yeah.
And right here we had a nice clean trend line. We made equal buy. I got to sales here, right?
Yeah.
But when we came here, we tapped into this. I think it was like a H1 refined zone. I forgot, but we had our what's the name? Then I took this as my liquidity sweep, right? Because after we broke this break in the retest zone, I took this as my sweep to enter here for my hedges, just in case my sales don't work out. Because I remember we had that strong H1 trend line to to take out, but I really don't understand why. Cause I was gonna set like 2 trades here, but I didn't want to take 2 L's, so I just took 1 L and said skip it. But I really don't understand why wouldn't I take this first one? Because I feel like if this was to happen again, I will always take it. I mean, I understand we had this gap right here, and then came in, filled it, but we also had a gap here,
Yes.
I
So
don't really know why would what would make this one not high probable than this one. I mean, I do understand this is the extreme, so that's probably why. But
well, yeah. Well, I mean, we wouldn't take this right here. We wouldn't take this because where's the inducement at?
Right.
So there's the one that I would take.
Oh, okay.
And then look over here. We got a breaker. We have a order block that took out the liquidity. So you got multiple confluences. This is the one I'm gonna take. I mean, there's nothing here. I mean, what are we gonna expect? If this becomes a failure swing, then sure. Now I get price a reason to take that. But this is the one that I would take. And yeah. Now this wick, that would depend on your brokerage data. You're using forex.com. So on some brokers, that wick didn't happen. So that's something that we just cannot avoid. But yeah, that's where I would take it. So
yeah, and another one of my problems, it don't really be direction. It'd be like liquidity zones to trade from. It was a few trades I got into this on the week. I could send it really quick in the chat. For instance, this trade I'm gonna send in the chat right now. This trade, it didn't really tap off a POI that was really clear, but it ended up still working out because we had our build up or whatever. So I'm gonna send it in the chat. If you can open up that one. It'd be like sometimes it's like I don't know like which POI to take the lower time frame trades from. Like I understand that we was overall in this H1 zone. We had our liquidity, we had our build up, but on the inducement, right? I seen that on the M1 we had our T1, you know, then I was able to hop in here, but like it didn't really tap into anything. But like I understand that like it had to like tap into stuff. I mean, we got this gap, but it's like we have gaps everywhere, you know. And so like I be like, I don't know like which one to like really trade from. And like this one just ended up playing out. And cause like sometimes like this too is like we don't have a clear POI that is coming to tap into, but we had these break and the retest, so people got to sales. So I was able to get into loans just to trap the just to get into loans because we got people getting into traps here, but it wasn't really a clear POI. So I feel like that's one of my like main problems is finding like the clear POI on the lower time frames to like trade from.
Yeah, well, we don't use a lower time frame POI without the higher time frame POI. We need to have a higher time frame POI that lines up with a lower time frame POI. So we're not going to jump down directly to the
white box was the higher time frame POI. This white box right here was high time frame POI.
Okay, so when was this? What day was this?
This was on either Thursday or Wednesday. It was one of them days.
On E, right?
Uh-huh. On the 5 minute, that was
5 minutes. Hold on, delete everything real quick. You said on when? Oh, I found it.
I believe it was right here.
Right there?
Uh-huh.
Yeah. All right. I'm gonna click to record. All right, let's go to the 4 hour. Okay. Now nothing there, obviously. Oh, so what exactly didn't you understand if price actually did come into an imbalance field?
So price came into this POI or these wicks that one, you know, so like we can expect sales, right? And then on the H1, I also seen the higher time frame, you know, trend line, right? Then I see that we did come tap into this after we filled the, you know, what's the name? Then on the M15, it's like sometimes like before this right here happens, we having more fair value gaps here, or we sometimes on the small time frames have ones here. But from my understanding, this is also a build up, and it made everyone get into the shorts. So from my understanding, that like if we was to trade here, this would be part of the build up, right?
Yeah.
So it's like why would we trade here? But it makes sense on the but it does like make sense, but like when we be part of the trap?
Yeah, so pretty much you're asking the same question that I got asked, what that the whole world asks is, how can I avoid a trap? How can I know this is a trap? Right? How can I know that this is not going to actually, you know, respect or not respect? Right? Now, if we look closely into this section here, this is actually a strong high, but you know, that's just going down to the 5 minute, but we cannot depend on the lower time frame itself, but we got to get the higher time frame. So the higher time frame POI was formed here. So this is the imbalance field price action, which is involved inside of this order block, right? And if there's stops right here, so if there's liquidity here, if price takes out that high, then what the prices do? It just took out stops, right? It just took out people, right? It came into a higher time frame POI into there. If you took that short there, nice, took that short, but let's say it fails. If it fails to break this low, then what is this going to be? A steady swing. Now it's giving you a reason to go higher, right? So in other words, just to give you a real answer is take the risk, take it there, right? Because if you don't want to take it there, let's say for me, if I was looking for a high quality setup, then and then I'm like, okay, that's the buildup, and I'm waiting for this, then I'm gonna miss that trade. So you have to accept that you're gonna miss that trade if you're waiting for this to happen. So let's say that you take it here. You have to accept that when you take it here, price can do two things. One, break structure, hit TP, make money, cool. Or number two, failure swing, then that becomes not liquidity, then it taps here, then it will go. That's why we got T1 and T2, right? Because one or the other is going to happen. But the question is, are you prepared? Like, are you aware that this may fail? So that's where your proper management pretty much just comes in play.
Okay.
Because like, I can't sit here and tell you, yeah, bro, 100% is going to come here. In hindsight, I can say yes. But in the real market, we can both agree that it's not like it's not like that. It's not going to happen exactly as we potentially think is going to happen as, right? So the liquidity is here. That's the high. There's stops. That's the closest POI to the stops. That's the one I would take, right? So I'll take that, target here. All right, I'm in this. I'm in a short on the 1 minute time frame, for example. All right. This is a nice 1 to 6. So let's say a price comes here. I'm floating on 1 to 5, for example. All right. And then price creates that break. Based on my rules, I'm gonna exit my trade because it just created an opposite QM. It just broke a high. It shouldn't break a high, and it broke it. So now I can anticipate this to get taken. So here we go again. And now this just became a pool of liquidity. So now this is just engineering liquidity, which is also called engineering liquidity. What's just above, the element to get a wick. Here we go, let's take that short here. All right, so that's why you see people do this. So if this played out like that, it would be like this. It will be the short, it will be the long after